about November production. I went with a theme that our safety people often use when it gets to be that time of year: slips, trips, and falls. And so I'll kind of use that as we walk our way through. Production did slide or slip from October to November, about 10,000 barrels a day, which is what we talked about as really the long-term trend. That's just right on the long-term trend for the number of drilling rigs and frac crews that we have working in the field, and also the number of well completions. So not really a big surprise there. That is good news in that we're, as of the end of November, we were still above 1 million barrels a day. With what has happened weather-wise, beginning the very first week of December, there is still a real likelihood that we fall below 1 million barrels a day by year end. If not, January really looks like that. But some slippage in terms of production, about 10,000 barrels a day. I think one thing of note is that 8,000 of that, 80% of it, was on Fort Berthold. And I don't have an answer for you at this point of why that is. That's something that came out in the numbers as I was working them last night and this morning, and I'd like to, I've got some questions for some operators to see what is behind that. But most of that production drop actually occurred on Fort Berthold Reservation. So significantly more impact there than across the rest of the state. Natural gas production up again. And so once again, the trends are running counter to each other. And so even though we had natural gas production up, flaring went down, and that was good news. But it really does reflect how much more significant natural gas production is becoming in terms of North Dakota revenue and production and operations and gas capture, and how important that is. Well count went up, and so we saw, in fact, I think both unconventional, conventional wells went up. Need to take a minute there because I've been getting reports from my field inspectors that starting about a week ago, companies were plowing the road into their conventional wells just so they could get in there and shut the wells down safely. So we're seeing enormous numbers in the probably dozens to hundreds of conventional wells that are being shut in this month. And so they're doing a one-time snow clearing so they can get in and safely secure the tanks and the wells, and their plan is to just leave them shut until spring. So we're going to see, I think, coming up, significant decline in the number of conventional wells, that 2,000 conventional wells, and that conventional oil production. I think we'll really see some serious decline set in there, and that's about 53,000 barrels a day in November. So there's going to be some real erosion there. The one area where we really took a fall was permitting. And so I don't know if it had anything to do with the holidays or if it's just that oil companies had fulfilled all of their 2016 obligations, and they had everything they felt that they needed in place for 2017. But we saw the permitting numbers drop by more than half from November to December. So a very large fall in permitting numbers, and that's kind of a leading indicator. That is the number that feeds drilling rigs. So as we move to that and we talk about the rig count rose from October to November, rose a little bit more from November to December, but it has since dropped by 4. And part of that is weather. Part of that also is pricing. I've talked about those magic points of $50 a barrel WTI and $60 a barrel WTI. The market, I checked it this morning, and the NYMEX market still does not have a $60 number in it. So all the way out to 2025, NYMEX futures don't have a $60 barrel anywhere. We have been above $50 a barrel since December 1st. So we're halfway to that 90-day point where operators feel very confident that we're going to be in the price range that fracking uncompleted wells makes sense. And that should roughly correspond, if we have another 6 weeks or so, that'll roughly correspond with the end of winter. And so those two things coming together, I think, should give us some optimism about stabilizing the decline in production at that point. We had 71 wells completed. That was a nice increase in November over October, but it's still not enough to hold production flat. We really need 80 to 90 wells a month to be completed in order to hold production flat. And so we're on trend with continual declining production. Weather was beautiful in November, but hang on to your hat, because December and January are going to be a different story. Not only have there been just one precipitation event after another, but the temperatures have been so cold that hydraulic fracturing makes almost no sense economically for companies, except on the very best wells or situations where they need to establish production on a spacing unit. And seismic activity has fallen to zero. Natural gas prices surprisingly were down October to November, even though storage now is right at the 5-year average. And so I think we'll see some natural gas pricing increases as we go forward here, at least in the short term. Happy to see flaring return to well below the 85% gas capture target. So statewide, industry captured 89% of the gas. If you bring all the wells in, I think Justin's number is going to say 90%. It's right in that range. The goal for gas capture right at this point is 85%. So that's all about Alliance Pipeline coming back on, and the fee portion of Fort Berthold being able to capture their gas and get it to market. The blizzard of federal regulation has not stopped. So in North Dakota, we know what blizzards mean. Last week, in fact, a week ago today, a hearing was held in Casper, Wyoming on a preliminary injunction motion by North Dakota, Montana, and Wyoming to block the BLM venting and flaring rule. And we're expecting a ruling today or Monday at the latest in that case. The rule would take effect next Tuesday unless a preliminary injunction is issued or a stay of the rule is issued. Those were the two options that were put in front of Judge Skavdal, so we'll see how that goes. On the EPA side, they surprised us basically on Christmas Eve with the judge approving a consent decree, a sue and settle between the environmental organizations and the EPA. We're seriously looking at an appeal of that decision. Our motion to intervene was denied by that same judge, and that was done on a Friday during the Christmas holiday season, and then the consent decree was approved on Christmas Eve by the same judge. It's a classic sue and settle situation, and it's what North Dakota's always been concerned about. In this case, we're not concerned about a review of the RCRA regulations. What we are concerned about is a strict timeline for that review and following rule proposals that goes beyond the Congressional Act and the authorization that Congress gave EPA. They were supposed to do a review every 3 years, and you could argue that they did not. But for a consent decree where we were denied the opportunity to intervene, to be entered, that sets hard dates for that review and for subsequent rulemaking is outside the law. And so we're looking at ways that we can resist that. And then the last one I want to talk about is the brand spanking new proposed rulemaking by PHMSA, in which they are looking into completely overturning North Dakota's oil conditioning regulations and imposing a regulation of 9 psi reed vapor pressure on crude oil by rail. And so I anticipate that the Industrial Commission will be commenting on that, certainly. And I'll be talking to them about that Tuesday. And that would be a major interference with an oil conditioning rule that we believe has been very, very successful. So slips, trips, and falls. Production slipped, permitting fell. A little bit of a trip up in the drilling rig counts and fracking counts. Clearly, the temperatures have fallen, and seismic activity has fallen to nothing. And the blizzard of federal regulation continues unabated. So with that, I'll take questions.
Okay, we do have a question from the webinar. With well count hitting an all-time high, why are oil companies drilling new wells with low prices?
Well, great question, and that question gets back to the core area of the Bakken. There are a number of North Dakota producers who are pure Bakken players, and I'll just name three: Hess, Oasis, and Whiting. And they have very lucrative assets in the core area of the Bakken. And so even with the number of uncompleted wells and an all-time high in well count, the assets that they have are very profitable to drill, even at these oil prices. And those are the best assets that they have, corporate-wise. Alternatively, you could look at a company, SM is an example of the opposite. SM has been a North Dakota company for decades, but they have significant producing assets in the Permian. They liquidated the first batch of their Bakken assets to capitalize Permian drilling about 2 months ago, and just announced this week that they're selling the rest. So they're going to leave North Dakota and take all of the money that they generate from those asset sales and invest them in the Permian in their wolf camp. So, but there are a number of large companies, and I named them, who are pure Bakken players and have great assets in the core of the Bakken, and it still makes sense for them to drill and add new wells.
Is there some aspect to that about older wells not coming offline as soon as they would have before too, to have that total well count that high?
Yeah, the question from in the conference room here was, is there an aspect of that well count climbing the fact that conventional wells are not being taken offline? And in fact, the answer would be yes, the conventional well count actually increased month over month. And so with the really good weather that we had in November and the mobilization of workover rigs and the oil price being above that magic $40 WTI number, conventional well count and conventional production actually increased month over month.
But your people are seeing that change in the last few years?
That's changing since the Happy New Year. You know, we had the blizzard on Christmas, and I think we've had one every week since then. And so, yeah, we're seeing, and I'm getting lots of reports of hundreds of wells being shut in. And they're doing it safely. I do have to commend industry for plowing the road so they can get in and shut the well down safely.
Okay, another good question here. Actually, I don't think I've ever heard this discussed, so it's a good question. It's good. When does permitting, so the downtrend in permitting, translate into production? So if permitting dropped a lot in November, what month will production begin declining because of a drop in permitting?
Mm-hmm. And it is a great question. There is not a direct tie, because once a company gets a permit, typically within 6 months they could mobilize a rig and act on that permit. But the general rule of thumb for lead time is a year. Permits are good for 1 year, and so when you see a significant downturn in permitting like that, it's normally about a year later that we see that impact rig count. You know, there's going to be another lag as you'll see information from the pipeline authority shows that currently, I think it's about 185 days from the time a well is drilled to the time that it's completed. So there's another 6-month lag in there. So from a permit turned down to a rig count turned down is about a year. From that to an effect on production, about another 6 months. So you're looking at about 18 months out. That means that this number could, and we'll have to keep track of that, it could impact production in June of 2018.
Long way from now.
But there's a whole lot of things that could impact production between now and June of 2018, but that would be the norm.
Okay, so the question I think we've been getting a lot, of course, is if President-elect Trump repeals a lot of the regs, particularly the methane rule, a lot of these legal actions will be dropped, will they not?
Yeah, that's correct. I mean, we have requested money to be placed in a budget somewhere so that we can maintain legal counsel and follow these legal actions through to the end, whatever that end is. But our anticipation is that, for example, the PHMSA proposal, that's within that 60-day window where a new administration could say, just drop that one. The BLM venting and flaring is a little bit older than that, and it's harder to undo. The RCRA decision is within that window and is relatively easy to undo, although it is a court order. So a little bit of uncertainty as to what the right process is there. But yeah, much of the last 5 pages of the director's cut, that will begin to shrink, I expect.
Take some trees. So Hess has announced it would add 4 more rigs this year. Other operators are talking about adding rigs. Should North Dakota production jump well above 1 million barrels a day after April and stay higher? What do you see on that?
So the first part of the premise is absolutely correct. We just met with another major operator this week who said they plan to add 5 or 6 rigs. And so the anticipation is that next year, next fiscal year, which will begin July 1st, so that's fiscal 18, that we'll have 50 rigs operating in the state. And the year following, we'll have 55 or more. So absolutely, we're building that into the revenue forecast. We're building that into our expectations of what's going to happen with production. At the current rig efficiency, if they frack all those wells, it takes 40 to 45 rigs to maintain production. So if we want to maintain production between 900,000 and 1 million barrels a day, we need to get to that 45 rig count number. Anything above that will turn the trend around and begin to build production again. So that's not likely to happen till the end of this calendar year, kind of mid fiscal 18. That's when we anticipate that impact on production.
I have a dumb question.
No such thing.
Can you help me understand natural gas versus oil? How does the natural gas go up when the oil is staying kind of where it is? Like we're at a record for natural gas. How does that work?
Great. So the question was, why don't the oil and natural gas trends follow each other? Why are they moving in opposite directions? And in this case, again, the explanation is that all of the drilling currently is concentrated in a high gas-oil ratio area, the core of the Bakken. So the overall statewide ratio is 1,000 cubic feet of natural gas with each barrel of Bakken crude oil. Within the core area, it's 2.5 to 3 times that. And so as they drill and concentrate in that core area, the wells produce 2.5 to 3 times as much gas for every barrel of oil as the overall Bakken average. And so gas production climbs even as oil production is diminishing a little bit. We haven't gotten to the point, at some point in time, the pressure in the Bakken rocks will begin to decline, and we'll see this trend kick in statewide. But we haven't reached that point yet. It's just a matter of where they're drilling the wells.
And the flaring reduction also plays into it, or?
It certainly does. The question was about the flaring reduction. The great thing about what North Dakota did 2.5 years ago with gas capture plans is that as this trend began to set in and people focused on the core area, we made them tell the gas processing and gas gathering people that that's what they were doing. And so the infrastructure was built in that area to capture that gas. So even as oil production dropped and gas production increased, the capital was being expended in that core area to capture that gas and get it to market. So the gas capture planning that went in as a result of the Commission's rule has really worked.
Thanks.
Can I follow up on that? How does the cold weather and the like weekly snowstorms we've had, how is that going to factor into the price of gas? Since I think a lot of the gas will leave state, right?
Yes.
The gas goes to.
So the question is, what about the cold weather and what's that going to do to the price of gas? North Dakota is a very small consumer of natural gas, but the cold weather that we're experiencing is spreading to the east and to the south across much of the nation. So the price of natural gas has to go up. In fact, it was announced, I think, yesterday, maybe the day before. The Energy Information Agency was shocked by the drawdown in natural gas storage in the country. That's going to push the price of natural gas up significantly. That's going to really help the people who invested in this infrastructure to capture this gas because it hasn't been all that profitable. 2016 was not a good year for return on investment for natural gas gathering and processing. We saw early in 2016 a case where natural gas liquids were selling at break even or even at a loss. That will all change with the cold weather. On the flip side of the cold weather is that gathering natural gas when it's this cold gets to be a real chore. Everything that's in that natural gas wants to turn into a liquid at these temperatures, beginning with the water. And so the consumption of methanol to keep the gas pipelines open and the amount of effort that's going into making sure they don't freeze up and shut down is enormous. And so we're actually seeing people being imported into the state to pump methanol through these pipelines and pig the pipelines to get the water and the propane out. Propane becomes a liquid at -40. And so a lot of the liquids that we would normally separate at the gas plant are trying to separate in the pipes now.
Okay, there are no other questions here, and there are no other questions from the webinar, so we will call it a session, and we'll get Mr. Kringstad here.
We went off easy.
I'm sure that'll change next month when we have a whole list of legislation to go through, I bet. A lot more on our plate by that time, I believe.
Hey, Lynn, they want to change it to 9, this RVP, what is the state number?
Well, the state number is a different measure, and you can't translate the two. But that's a big part of the problem. They want to go to reed vapor pressure, which is for gasoline. We use crude oil vapor pressure of 13.7. So they're not.
There's you can see in there, and you got the electronic version. And I'll just tell the whole webinar too. If you guys are wondering about the PHMSA rule compared to what our rule does, we did include in that section a link to our oil conditioning order as well as the frequently asked questions page. I haven't read through it in a while, but I know we addressed the 9 standard, but I have to think if we actually address the difference between RVP and vapor pressure, we may have to add that. I don't think that's on there, but we will have to take a look at that if you're wondering about the difference in what PHMSA is proposing and then what our rule actually does. So I'll stop yapping about that and turn it over to you, Mr. Kringstad.
Okay, thank you. Again, Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into an update on surrounding states' oil production. Continued, very minor slides, eastern Montana, North Dakota, still keeping that total U.S. Williston Basin production right around 1.1 million barrels of oil per day that the transportation network is handling on a daily basis. A little bit of shifting taking place in the month of November. Primarily, you'll notice that green piece of the pie, which typically hovers around 1 or 2%. That is the estimated volume of crude oil being moved north out of North Dakota onto a pipeline system in Canada. And you'll see a slide here in just a moment about some recent changes there. The other numbers holding relatively steady for pipeline and rail movements out of the region. And so you'll notice the first thing on slide 4 now, this is that trend. The one thing that was interesting for the month of November was there was almost a $1 premium WTI to Brent. And so we haven't experienced that a lot recently. Typically Brent has been trading at a higher price than WTI, but for the month of November, monthly average, it was just about $1 stronger pricing for WTI in the mid-continent versus the global Brent oil price. And when that happens, typically we see barrels trend more towards the pipeline side if they have that flexibility to get off of the rail networks. So that green line at the bottom, we saw the percentage jump up month of November, as well as the estimated rail percentage go down as those barrels shifted towards pipeline networks. And then on slide 5, then just taking a look at the estimated rail volumes, again, correlating with what the market was doing into those volumes. So now somewhere between that 310,000, 330,000 barrels of oil per day being estimated for the month of November. Continuing to see that back and forth market share battle between the East Coast and West Coast for rail out of North Dakota. Right now it's about half and half. Half of the barrels going to the East Coast of the U.S., half the barrels going to the Pacific Northwest out of North Dakota. And then a snapshot of pricing at that same time period. So again, you'll notice this was October pricing for what refineries were paying. That's the most recent. We don't have November numbers yet. But again, taking a look, the East Coast had the highest, followed up by the West Coast, and then PADD 2, slightly stronger pricing even than PADD 3 down in the Gulf. And typically, that PADD 2 is a little bit weaker than the Gulf Coast. So these are things that impact those marketing and transportation decisions out of North Dakota. Then where we sit today, back to what we've seen more recently, historic trends, now just over $3 premium for the Brent pricing. And so I would expect that some of those barrels that may have been getting trucked north into Canada, maybe to get on a pipeline system there, those will get back on to potentially the rail network here in the state. And this was that slide. So this was these are numbers, these are not state controlled numbers. These come from the federal government of movements of crude oil between North Dakota and Canada, and this was the highest that I've seen on the amount of exports from North Dakota going north into Canada. And so this is something I've gotten on the phone with some other folks that are out in the field and experts in this, and so there's folks taking a look at whether or not this was a one-time blip. Is there something else going on? But it was definitely an anomaly that we have not seen in the recent past. Switching gears now to natural gas, as Lynn alluded to, my numbers without the confidential data, 10% flaring, 8% again continuing to come from those wells that do have a pipeline connection, as opposed to the continued 2% that gas that is still in those stranded wells that do not have any type of sales outlet for that natural gas. Slide 11, you can see coming back down, as Lynn alluded to, with the October numbers when we had the Alliance planned outage, that being back online now, things coming back down to a more normalized trend, getting that gas gathered at the field and getting it moved to markets, again exceeding the NDIC's required gas capture targets. And then some other positive news. You had heard Lynn talk about well completions being up in November, along with that black line, the new wells getting connected, the new wells producing natural gas, the black line, the new wells selling gas, also exceeding the pace of completion. So again, as activity starts to return, it's important then that those gas gathering companies have the crews available and the capabilities to get those wells connected as quickly as possible so we can stay on top of the gas capture requirements in the state. And then just a quick update on natural gas liquids. Again, trending upward slightly here. These are October figures, but as these gas volumes continue to increase, gas capture stays strong, these natural gas liquid volumes are going to continue to grow out of North Dakota. So with that, that is the last prepared slide. I'd be glad to answer any questions.
In terms of the export that you saw a high number, are the tar sands producing yet?
So this would be, so the question was, maybe is there any type of connection between North Dakota and the oil sands up in Alberta? And so these truck volumes that we're anticipating moving out of North Dakota into Canada, it's not a long haul truck trip. It's just simply over the border to gathering systems and infrastructure on the Canadian side of the Williston Basin place. So these are not long haul barrels up to further producing areas of Canada. So really no tie between these movements, say, and what's taking place up in the oil sands regions.
I imagine if you had more insight about the cause of these exports into Canada, you would have shared them.
Yeah.
So people are interested in that. So I've asked them to just make a note, make sure you make a note that we'll follow up next month to see if there's any sort of recognizable trend, like you said, if it's just a blip or if it just continues. So we'll address that right there. Any idea how many of the 13 crude rail terminals are not shipping or permanently shut down?
I don't have any numbers on how many are still operating. From just things I've heard and seen out there, the smaller, what are typically known as manifest facilities, the ones that aren't unit train capable, the facilities that don't have good pipeline gathering or interconnectivity, those are typically the ones that are going to see reduced volumes and in some cases down to zero. Most of the bigger facilities, the ones that have pipe connections coming in, pipeline outlets as well, those continue to see a significant share of the usage for crude by rail.
Are all the North Dakota exports into Canada, are they via truck?
That's our understanding. The way the numbers are presented and the trends we've seen historically, the assumption is that those are all by truck.
Can you talk about what the impact could be of this new regulation, the PHMSA that's proposed regarding rail or versus pipeline, that sort of thing?
At this time, I don't know that I've got a whole lot of comments on the potential impact of it. I'm going to have to dig into it a little bit deeper before I be able to make any type of connection. So I apologize for that.
Okay, that's all the questions. Unless you have something.
No, I was just thinking about the connection WBI to Viking, whatever that was called.
Yeah, the Valley expansion.
Am I correct that I don't know if that statement has come back on that?
That I don't on the federal side, and so the project that's being alluded to is the project that WBI is working on to connect the Viking interstate natural gas line in western Minnesota to its line near Mapleton in North Dakota. And so that is a FERC-regulated system. They're going to have to work through FERC for the routing and the final approval of that. As far as where they're at in that stage, I'm not 100% sure on the environmental impact statements and that type of work. So.
Okay. That is all I have. Thanks, everyone, and we will see you next month.
Thanks. Thank you.
The reason why I asked is I've been getting